Welcome to Tax Smarts Unlocked, the podcast for individuals and small business owners looking to conquer the tax landscape with confidence. Hosted by seasoned tax professional David Robson of Premier Tax and Business Services, each episode is packed with insightful advice on proactive tax planning to help you navigate the complexities of tax laws. Here's your host, David Robson.
Welcome to Tax Smarts Unlocked. I'm David Robson, your tax planner with a pop filter, here to help podcast creators monetize their passion while minimizing liabilities. Today, we'll turn confusing tax jargon into practical steps you can use between recording sessions. We'll cover hobby versus business rules, revenue streams and forms, smart entity selection, self-employment tax planning, core deductions, depreciation, home studios, travel, startup costs, QBI, retirement and health strategies, sales tax, multi-state pitfalls, working with people, international angles, audit-proof record keeping, estimates, year-end moves, and 3 case studies. Grab favorite mic. Let's make numbers sound as good as your show. Let's start with the hobby versus business question. The IRS looks for a genuine profit motive. Show it by separating finances with a dedicated business bank account and, ideally, an LLC for liability protection. Build a simple written plan, content calendar, monetization targets, marketing channels, and pricing. Track consistent efforts to earn, like pitching sponsors, deploying affiliate links, launching subscriptions, or selling merch. Invoice clients, collect W-9s, and keep books monthly. Aim to be profitable 3 of 5 years, but don't panic if growth takes time. Documentation wins. Reinvest strategically and avoid commingling. Businesses pursue revenue systematically. Hobbies consume cash casually. Podcast money wears many hats. Ads and sponsors are ordinary business income. Affiliate links, listener support through Patreon or tips, and paid subscriptions also flow onto your return. Live events, workshops, courses, and coaching are taxable too. Merch creates product revenue plus potential sales tax obligations. Licensing your content or syndication generates royalties, reported as business income when it's your trade. Don't ignore barter. Free microphones or hosting credits are income at fair market value. Quick case. A sponsor traded a $900 mixer for a host read. The podcaster recorded $900 income and deducted $900 equipment. Net zero cash, clean taxes treatment. Expect forms. Sponsors and platforms may send Form 1099 NEC for services. Some royalties or prizes appear on 1099 MISC. Marketplaces and payment processors can issue 1099-K for gross payments. Regardless, you must report all income even if no form arrives. Matching programs are strong, but taxability doesn't depend on the paperwork. Track gross receipts by source so you can reconcile forms without double counting. Watch evolving 1099-K thresholds. Many states use low triggers, and federal rules continue shifting. If a form includes sales tax or platform fees and gross totals, adjust on your books so income matches reality, not processor math exactly. Early on, many podcasters operate as sole proprietors. Add an LLC for liability protection and clean branding. Tax reporting often stays the same. If you have a co-host sharing profits, you're a partnership and file Form 1065 with K-1s. As profits grow, consider an S corporation election for your LLC or corporation. The S election, made with Form 2553, can reduce self-employment taxes, but it introduces payroll, reasonable compensation, and stricter compliance. Timing matters. Elect prospectively and confirm state rules. Keep administrative load proportional to revenue. Choose the entity that supports cash flow, protects you, and simplifies future scaling nicely. In an S corporation, you wear 2 hats, employee and owner. You must pay yourself reasonable W-2 wages for the work you perform. Remaining profits can be distributed without additional self-employment tax. Strike a defensible salary using industry data, time devoted, and duties. Use an accountable plan to reimburse business use of your home office, internet, phone, and mileage tax-free. Mini case. A podcaster netted $180,000 as a sole prop. After electing S status, they paid $90,000 reasonable wages, took $80,000 distributions, and saved thousands in Medicare and Social Security taxes, while staying compliant with payroll filings and deadlines annually. Claim the deductions you earn. Common podcast expenses include microphones, mixers, interfaces, cables, stands, boom arms, and headphones. Computers, tablets, hard drives, and backup services qualify. Editing and recording software, plugins, music or stock libraries, sound effects, and voiceover services are deductible. Hosting platforms, RSS services, web domains, site builders, email tools, schedulers, and analytics count. Marketing, ads, design, and social media management qualify. Professional fees for legal, tax, and bookkeeping are deductible. Liability or equipment insurance, education, conferences, and mastermind memberships fit when ordinary and necessary. Don't forget contractor payments to producers, editors, designers, and virtual assistants. Collect W-9s first. Big gear brings big choices. Section 179 lets you expense qualifying equipment in the year placed in service, limited by taxable income and annual caps. Bonus depreciation currently allows immediate write-offs for eligible new and used assets, with a life of 20 years or less, subject to phase-downs under current law. Computers, mics, mixers, interfaces, and certain software can qualify. If income is light this year, consider slower MACRS depreciation to preserve deductions for later. Time your purchases. Actually receive and start using gear before year-end to claim it. Coordinate with your entity type, state conformity, and cash flow carefully. Your home studio can generate a solid deduction. To claim a home office, the space must be used regularly and exclusively for your podcast business. Choose the simplified method, a per square foot rate, or the actual method, allocating mortgage interest or rent, utilities, property taxes, insurance, repairs, and depreciation based on business percentage. Internet and phone are partially deductible. Allocate reasonably and document. Soundproofing and build-outs may be improvements depreciated over time. Smaller acoustic treatments can be supplies. Keep photos, floor plans, and measurements. If you're in an S corporation, reimburse home office costs through an accountable plan, not Schedule A. Travel and meals are valuable, but rules matter. Deduct ordinary and necessary travel tied to income, conferences, sponsor visits, live shows, or recording sessions. For vehicles, choose standard mileage or actual expenses. Pick the method that maximizes benefit and keep detailed logs. Commuting from home to a regular office isn't deductible, but trips from your home office to business locations are. Lodging is generally deductible. Meals are typically 50% unless specific exceptions apply. Keep contemporaneous records: who, what, where, when, and why. Snap receipts into your bookkeeping app, note business purpose, and separate personal add-ons. Clean documentation wins audits reliably. Startup costs include pre-launch research, training, and branding. You can deduct up to $5,000 of startup and $5,000 of organizational costs in year one, phased out when costs exceed $50,000. The remainder amortizes over 15 years. Once operating, the qualified business income deduction may allow up to 20% of qualified profits as a deduction, subject to taxable income thresholds, and at higher levels, wage and asset limits. Creators typically qualify. S corporation wages reduce QBI, but non-wage profits may benefit. Model both salary and distributions. Keep qualified business status clear, avoid specified service pitfalls, and coordinate with retirement contributions carefully. Retirement plans help you keep more. A solo 401k allows employee deferrals plus employer contributions, often beating a SEP IRA for moderate income because deferrals aren't capped by the 20% net rule. SEPs are simple and flexible, great when you start late. With an S corporation, contributions are based on W-2 wages, not distributions, another reason salary planning matters. If eligible for an HSA, contributions are pre-tax, grow tax-free, and withdrawals for qualified medical expenses are tax-free. The self-employed health insurance deduction can offset income, but S corporation owners must run premiums through payroll or shareholder health reimbursement arrangements to stay compliant. Merch means sales tax headaches, unless you plan ahead. Many states tax tangible goods. Some tax digital products or downloads. If you sell through a marketplace facilitator like Shopify's managed platform, Amazon, or Printful, they may collect and remit in many states, but not all. Confirm facilitator coverage and keep certificates where required. Performing live shows can create income tax nexus or city gross receipts duties. Plan filings before crossing borders. Case study. A podcaster launched Tease via a facilitator handling multi-state sales tax. The creator focused on designs while the platform filed returns. Burden shifted, audit risk lowered, pricing stayed consistent nicely. Build a team wisely. Classify workers correctly. Contractors control how and when they work and provide their own tools. Employees follow your direction and may require payroll. Collect W-9s from contractors before payment and issue 1099 NECs each January for payees. Giveaways can be deductible marketing, but prizes are taxable to winners. Issue 1099 emis if thresholds apply and disclose terms. Paying or being paid by foreign platforms introduces withholding or reporting issues. Gather Form W-8 from foreign contractors, assess treaty relief, and watch VAT on services. Remote team members can create nexus. When classification blurs, err toward payroll or call counsel. Let's land the plane with process. Use a separate business bank account, bookkeeping software, and receipt capture. Track income by stream and tag expenses to episodes or campaigns for clearer ROI. Pay estimated taxes using safe harbors, 100% or 110% of last year's tax, or annualize if income is seasonal. Coordinate with a spouse's W-2 withholding to smooth cash flow. Before year-end, time gear purchases, scrub books, count merch, and record COGS. Plan next year's entity, payroll, and retirement targets. Call a pro around $75, $100K revenue, multi-state activity, payroll, or complex contracts. Thanks for listening. Tax Smarts Unlocked helps creators keep more.
Thank you for joining us on Tax Smarts Unlocked, the ultimate podcast for individuals and small business owners ready to conquer the tax landscape with confidence. Hosted by seasoned tax professional David Robson of Premier Tax and Business Services. Each episode has been carefully crafted to provide you with insightful advice on proactive tax planning. By adopting a smarter tax approach, you can focus on what you do best, growing your wealth and your business. We're here to guide you every step of the way. Don't miss an episode. Subscribe to Tax Smarts Unlocked on your favorite podcast platform and unlock the secrets to confident tax planning. Remember, it's time to take control of your taxes and unleash your full financial potential.